Have you ever wondered how to start trading but feel lost due to the extensive amount of information online about cryptocurrency and day trading in general? Well, I'm Hedge Alerts, and I'm releasing a multi-part video series for free educating you on how to trade. Trading is a visceral experience for everybody that partakes in it, and it can either crush you or make you feel like $1 million. So, what is trading? What it is an exchange of a certain thing at a certain price, and that price is determined by the buyers and the sellers. There are multiple different things you can trade. You can trade Forex, which is a currency exchange. You can trade stocks, which is essentially trading the rights to own a company. You can trade cryptocurrency, which is a digital form of currency that is decentralized and peer-to-peer. Essentially, you can trade anything. You could trade musical equipment, and the price of that would fluctuate based on the amount of buyers to sellers. You can trade baseball cards. Any kind of physical or any kind of item that has any inherent worth to it can be traded. And that is the basis of how trading works. But you may be asking yourself, in this kind of environment, in crypto, how do you trade to make a profit? There's no way to know where the price is going to go. There's no way to predict the future. And there is no definitive way to predict the future. However, there are techniques in trading that allow you to make a prediction to what the future might hold. And here we get into the different ways that people trade and predict future price action. The main thing that individuals use to make these predictions are called chart patterns. And essentially, what these chart patterns are is they are common trends or common price points that have been seen throughout a certain period of time on a chart. Now, on a chart here, what you see is you see a candle. There's an opening price to a candle, there's a closing price. If it's green, it opens in the middle here, and it'll close at the top if it's a green candle. The top is the closing part. If it's a red candle, it opened in the middle and closed below. So it closed below the price that it opened at. And these are based on a time. You can have daily charts, hourly charts, 15-minute charts, and even charts that show price history in the last minute. People over time noticed that there were certain patterns in these showcases of previous price action where things were continued a certain price where people believed that item was worth. There are two types of chart patterns. There are bullish chart patterns and there are bearish chart patterns. And essentially, these patterns will either show you if the chart is pointing towards a higher price or a lower price. Right here, we can see Bitcoin on the daily chart. And this right here, you can see a chart pattern in this. If you use a line tool and connect these candles together, you can find yourself seeing a common trend in price action here. If you go into a lower time frame, you can see it's more detailed. And you see that there is clearly a trend line here. And if you take the trend line tool again and draw a rough line, you can see that there is a commonality between these price points right here. You could even draw this way. You could draw it this way, or you could draw it this way. The thing about chart patterns is that it is within the eye of the beholder and how they want to look at the pattern, and they can deem themselves what this means. I have another video going in depth on chart patterns, and you can go find that in the description. There it explains how the majority of them work, what the majority of them mean, and how you can use them to your advantage to make money in crypto. The thing about chart patterns is they're effective, but the thing about trading is you can't use just one source of information. You have to use a broad array of tools to help you determine whether something might go up or might go down. That's where technical indicators come into play. Technical indicators like RSI, MACD, and volume. Essentially, what indicators are is a programmed that has certain parameters based around it. And every time those certain parameters meet a certain criteria, it executes a sign of what could possibly happen in the future. Some of them are informational, and some of them could possibly be categorized as more speculative. A volume indicator here takes the trading volume within that candle, within the time frame. So right here we're on a daily time frame. So this right here was the amount of volume traded in this day right here. Volume is an extremely crucial indicator, as it can show you if there is more buying volume or more selling volume. Or here the RSI indicator, the relative strength index. Essentially what RSI does is it measures the magnitude and speed of the coin's recent price changes to determine whether it's overvalued or undervalued. And it can indicate things like reversals. There are also patterns within the relative strength index that you can use to your advantage. And sometimes trading is not all about chart prediction. Sometimes trading can be following the news and determining whether there's hype around something, or there's a big announcement coming for a certain coin, or even a stock if you're trading in stocks. News sites are integral to understand the crowd mentality and upcoming plans or changes to a certain thing. One of the best news sources that everybody uses is YouTube. There are a great amount of YouTube channels out there that dedicate all of their content to showcasing the fundamental crypto news, and channels that are dedicated to showing what certain coins are, what they do, and how they're beneficial to the entire crypto ecosystem. Why would somebody want to trade though? The thing about trading is it can be an extremely stressful and time-consuming thing to learn, and it's one of the only jobs in the world that you can work and learn about and work and dedicate yourself to and end up losing money at the end of the day. It's not for everybody. And one of the main things I would suggest to anybody who's looking into getting into crypto is to not deposit a lot of money into an account before practicing and proving to yourself that you can make money. But if you can make it in trading and make money, it can be extremely rewarding. You can trade anywhere in the world. The thing with crypto compared to the stock market is the stock market is limited by trading hours. There are certain times when the stock market opens and closes. The thing about crypto is that it's 24/7. It doesn't stop. So you can be in Hong Kong and trade crypto, or you can be in Kansas City. Trading provides freedom, and you can make a lot more money trading than anything else on this planet. It can be a very viable source of income for individuals that dedicate themselves to learning the craft. There are certain individuals that dedicate all of their time to trading, and all they do is make money watching the markets and studying news. There are some individuals that trade on the side that have it as a viable source of side income. There's some traders that only trade every now and again. It's all dependent on the individual, and that's why trading is so attractive, is it's very self-directed, and the only thing that's keeping you from making money is yourself. This also comes at a catch though, because you're also the only one that is preventing yourself from making money. I encourage anyone that is interested in learning how to day trade in crypto in checking out my other videos that I'll be releasing. They go into more depth in chart patterns, technical indicators, how you open an account in the first place, and I hope that this video was informative and maybe answered some questions about how trading works. It was very general, but it provides all the basic information on how to do it. So if you're interested, check out my other videos and stay tuned for more content. Thank you so much for watching. I'm Hedge, and I'll see you in the next one.